Investing is an excellent way to grow your wealth over time, but it can be intimidating for beginners. If you're new to investing, it's essential to understand some key concepts and strategies to make informed decisions. To help you get started, we've compiled a list of some investing questions that beginners often ask. These questions cover the basics of investing, including the different types of investments, risk management, and portfolio diversification. By answering these questions, you'll gain a solid foundation for building your investment knowledge and making sound investment decisions. So, watch this video till the end and learn the basics of investing. But before we move on, smash that like button and subscribe to the channel. Now, let's begin. Imagine owning a slice of your favorite company, complete with all the cash flow and profits it generates. That's exactly what stocks are all about: ownership. Now, there are two ways you can make a profit from your stock ownership. First, you can collect cold, hard cash in the form of dividends that the company pays out to its shareholders. Think of it as getting a little bonus just for being a part of the team. But wait, there's more. The second way to make money with stocks is by selling your shares for a higher price than what you paid for them. That's right, if the company increases its cash flow potential and the stock price goes up, you can cash in on the growth and pocket the difference. So whether you're a dividend lover or a growth seeker, stocks have something for everyone. With the right investment strategy and a little bit of luck, you can watch your money grow along with your favorite companies. You can start investing with as little as $1, and the power of compound interest, which Einstein called the eighth wonder of the world, means that even a small amount goes a long way. In fact, investing just $100 a month grows to over $86,000 in 20 years, and you'll make over $62,000 in profits even on that small amount. Start investing right now, like right now. It's fine. Start investing now, and in 10 years, you'll be glad you did. But first, I want to hear from you. What is your investing goal? What do you want to do with that money? It's important to have a goal, a reason, or a mental picture of what you want to do with this money to keep you motivated and keep you investing. Make that commitment, write it down, and place it somewhere where you can always see them. You'll hear all kinds of rules about how much to invest, from 10 to 20% of your income, but none of these are set in stone. You don't have to stick to a rule or invest the same amount forever. Start by putting away 10% of your income every month to invest in stocks, and adjust it up or down as you go if you can invest more or less. My first time investing was in my 20s. I was working 2 jobs and saving every penny to invest because I wanted to retire early. The problem was that I was miserable pinching every penny, and every 6 months I'd go on a shopping spree and set myself back a step. I was getting nowhere. There are a lot of investing sites, but they're all pretty much the same. There are 3 things you should look for. First, look for an investing site that doesn't charge you to buy stocks. Most sites have switched to a commission-free model, so if it charges you to buy or sell, it better have a great research tool. It's also nice to use a site that lets you invest in fractional shares. This means you can invest any amount of money in a stock, no matter what the stock price is. For example, you can invest $50 in shares of Amazon instead of having to buy a full share for $3,000. The site will just split up the money. There's nothing wrong with having more than one investing account, though. Between retirement and regular accounts, I have 9 accounts on 6 different investing apps, such as eTrade and Webull for research, M1 Finance for retirement, and Fundrise for real estate. It's free to open an account, and when you make a deposit, you often get a bonus like free shares or cash, as with Webull. Buying a stock is surprisingly easy. I'll show you how to do it on eTrade, but it's pretty much the same on any app. Go to a stock page and click on this Buy button to go to that order page. Here, you'll see an action to buy or sell and the number of shares you want. To figure out how many shares you want to buy, divide the amount you want to invest by the stock price. You don't even have to put in how many shares you want to buy, just how much you want to invest. So you're buying stocks. How do you get the best returns with the least risk? This is really about the stocks you buy. Investing with less risk means buying companies with stable cash flows, like Apple, Coca-Cola, and Amazon. These are companies that can grow and return cash to shareholders. You can also invest part of your money in dividend stocks, part in faster-growing but riskier companies, and the rest in exchange-traded funds. This will spread your money around and smooth out the ups and downs of any one stock, making for a less stressful investing plan. If you want to learn more, make sure you watch every video on our channel. But there are a lot of free resources and great books to read, like The Intelligent Investor, The Little Book of Common Sense Investing, and One Up on Wall Street. These 3 books alone will give you 90% of what you need to know to start investing, but if you want a more personalized plan, you can always hire a financial advisor. Now, let's move on. Start by looking at the big picture and investing in 3 main asset classes: stocks, bonds, and real estate. Invest maybe half of your money in these funds. Buy 1 or 2 funds in each of these asset classes to get a wide range of returns, safety, and cash flow. Some examples of funds in each of these categories are the Schwab US Dividend ETF, the iShares High Yield Bond ETF, and the Vanguard Real Estate Index Fund. So, now you're buying stocks. Let's go to the next question. Investing can be overwhelming, especially when you're bombarded with new ideas from every direction. But here's the thing, you don't have to buy into every stock that catches your eye. Instead, focus on finding 10 to 15 companies that you truly believe in and stick with them. Now, you might be thinking, but how will I know when to sell? The truth is, you might not ever need to. By investing consistently over time and holding on to those core companies, you can let your portfolio grow and compound without the need for constant buying and selling. Of course, it's important to keep an eye on your investments and make sure that the companies you're invested in are still performing well. Watch out for red flags like excessive borrowing or a stock price that's significantly higher than the company's actual value. At the end of the day, investing is about being smart, strategic, and patient. By sticking to your core holdings and making informed decisions, you can set yourself up for long-term success and financial stability. Click on the video to the right, because we'll be giving you more of these. And if you like this video, don't forget to share, hit the like button, and subscribe. Thanks for watching, and see you at the next one.